I know it's been less than a year, really, since you've joined KKR, raised $2 billion, more than $2 billion at the beginning of this year. This is your second investment from that fund. Interesting about Slice is that you announced this deal last night, just hours after Bloomberg reported that Uber was looking to buy GrubHub. How can Slice, which works with 12,000 pizzerias across the nation, how can that compete with something of the scale of GrubHub?
Sure, and thanks so much for having me. So this was actually the fifth investment out of our second fund at NGT. And we are hyper-focused on businesses that we believe can be category defining. And I think our vision as it pertains to the Ubers and the GrubHubs of the world is that Slice is focused on the independent pizzeria first. And they believe there's an opportunity to provide real value and help those independent pizzerias compete in a digital world for a digital consumer against the big pizza franchises and the horizontal food aggregators. It starts by providing value to them, and it ultimately does it by delivering at a significantly lower cost.
Right, but as an upstart, what kind of resources may it need to compete with the likes of a GrubHub in this day and age, especially as GrubHub and DoorDash have so much of the delivery market?
Sure. So first and foremost, this is the pizza industry is a highly fragmented market. So there's over 75,000 locations in the U.S. today, and over 50,000 are independently owned. A significant percentage of that are outside of major, dense metropolitan areas. And what Slice does better than anyone is provide value to the independent pizzeria and then charge them literally a fraction of what Uber would to provide their product. And so I think it starts with a better value, a better solution, and ultimately does it at a significantly lower price.
Jake, I suppose I'm still struggling to figure out why another delivery company is needed. Most independent pizzerias have their own delivery people. They won't have to pay, up to 30%. I'm not sure what Slice charges, but to an independent delivery company, right? And what are you getting out of it? I mean, what kind of return on investment are you looking for out of Slice?
No, that's exactly right. Delivery has always been part of the core value proposition for independent pizzerias. Think your local hometown pizza shop. But what they don't have is the digital resources to compete. And so what Slice has done is created a end-to-end technology platform that's vertically specific for pizzeria. It comes from a foundation, Elir Sela, who has 34 members who have worked in and operated pizza stores. And it allows them to be online. It allows them to do the things they can't do on a daily basis. Manage a website, build a website, optimize SEO, take payments, attract new consumers and existing consumers through their application, which has been growing, tremendously over the last several years. So we think there's an opportunity to create a vertically specific app and a vertically specific solution to this group of small business owners in a way that GrubHub and others just aren't focused on.
Jake, you must be absolutely chomping at the bit because valuations have changed dramatically over the last few weeks. Where are the opportunities now to pick up, basically what might be distressed kind of investments in Silicon Valley right now? And what is the future?
Sure. So we've got a slightly different focus at NGT, and in our KKR Growth Fund, we're looking for category-defining, category-leading assets that have great management teams. We're looking past this dislocation for long-term sustainable companies. So rather than sort of discount or bargain basement shop, we're truly in our fund looking for great companies, and we're going to continue to do so. And we believe, although this specific pandemic has been an extraordinary tailwind for Slice, we believe it's situated for real long-term differentiation.
Speaking of this being a tailwind for Slice in this environment, is the COVID crisis creating opportunities and investments you may have not otherwise seen? Are you changing your investment thesis in any fashion because of what's happening right now?
No, we're not changing our investment thesis at all. Although, again, we closed 2 deals in the last 2 weeks, both of which we'd been establishing a relationship with and we'd entered into conversations with before COVID hit. But both the pandemic is highlighting the need for both. So never before has there been a greater need to support our small businesses and provide them tools and solutions to continue to perform. Slice is doing exactly that. And we invested in another business called O9 Solutions, which is an end-to-end demand planning and supply chain business. And as we all know, this pandemic has revealed a number of things, one of which is the dysfunction of our global supply chain. And we believe '09 Solutions is truly the next generation provider in this space. So again, we're looking for, this is a fund that we closed in January. We've got a very long-term perspective with just under $2 billion of dry powder. Our focus is to find, invest in, and support great teams and long-term winners.
So with $2 billion in dry powder left, how can we see that being put to work? Is Slice a typical investment for you, or are there specific criteria you're looking for here as you're putting that money to work?
No, Slice is a great example of exactly what we're looking for. We spend most of our time in software, internet, information services businesses. So you'll see us, looking for high growth businesses with great management teams. If and when we can, we'd love to invest in these businesses outside of broad banker-led processes because we've spent years developing a relationship. And I think the relationships that we've been developing, proactive origination efforts to find these great companies over the last 5 to 6 years will hopefully benefit us in this period of dislocation and distance. We're going to be, working hard to support the best names that we've met, the best management teams we've gotten to know over the last few years, and I think you can expect a lot more of that. But we're going to be sticking to our guns. We're going to be looking for great category-defining businesses where specifically KKR can help. We think we've got an extremely differentiated global platform with a tremendous amount of resources that have been built over the last 44 years, and we want to bring that to the best growth companies in technology.